Robinhood just launched its own blockchain. It went live on mainnet on July 1st, and from the very first day, Chainlink is running the data layer and the cross-chain layer for the entire thing. That includes the tokenized stocks Robinhood is issuing on it, so NVDA, Google, Apple tokens that track real equities, all secured by Chainlink's infrastructure. In this video, I want to walk you through what Robinhood Chain actually is, why Robinhood went with Chainlink as their official oracle, and how this could impact you. So let's get into it. Before we dive into it, don't forget to subscribe and like if you like this video. That really helps with the motivation to keep making content. First, some context, because I think it's easy to underestimate what Robinhood represents here. This is one of the biggest consumer investing apps in the world. Millions of everyday people use it to buy stocks, options, and crypto just from the use of their phone. And the company has now decided that its financial products should live directly on a blockchain that they control themselves. Robinhood Chain is an Ethereum layer 2 built with Arbitrum's Orbit technology. So instead of deploying their products on somebody else's network, Robinhood built their own environment where they set the rules. They control the user experience and they can issue their own assets natively. The flagship product here is stock tokens. These are tokenized versions of real equity, so you can hold something like an NVDA token on chain and its value tracks the actual NVIDIA share. If you are familiar with my videos, you know that the tokenized stock is only as good as the data behind it. If your NVIDIA token doesn't know what NVIDIA is actually trading at, the whole product falls apart very quickly. And that brings us to why Chainlink is in this story from day one. Robinhood named Chainlink the official data and cross-chain oracle infrastructure for Robinhood Chain and for every asset Robinhood issues on it. 3 Chainlink services went live on mainnet at launch, and each one solves a very specific problem. First of all, data feeds. Data feeds and data streams handle the market data. When a lending protocol or trading app on Robinhood Chain needs to know the price of a stock token, that price has to come from somewhere reliable. Chainlink pulls the data from the real markets, verifies it across a decentralized network of nodes, and delivers it on-chain. Data streams is a low-latency version of this, which matters a lot when you're dealing with assets that move fast during market hours. Then there's CCIP, the infamous cross-chain interoperability protocol. This one connects Robinhood Chain to the wider multi-chain world. Without it, any asset you hold on Robinhood Chain would be just stuck there. With CCIP, those tokenized stocks and other assets can eventually move securely between those networks. Robinhood Chain launches as a connected network instead of an isolated island, and that's a big deal for how useful these assets can become over time. So why did they pick Chainlink specifically? Robinhood's own product team said it pretty plainly. They picked Chainlink because the same infrastructure is already trusted by the largest financial institutions in the world. And when you look at the track record, you can understand the logic. Chainlink secures over 70% of DeFi and has enabled more than $31 trillion in transaction value. Swift, Euroclear, MasterCard, UBS, Fidelity International, these names are already building with Chainlink standards. If you watched my previous videos, you should be well aware of that right now. For a regulated company like Robinhood, that matters enormously. Tokenized assets can scale if the data securing them is unreliable, and the regulators will not accept infrastructure that hasn't been battle tested. Choosing Chainlink was a low-risk option for them, and honestly, at this point, it's just becoming the default option for anyone serious about bringing real-world assets on-chain. Okay, so what does that mean for the Link token? On the fundamental side, this is of course exactly what kind of adoption you want to see. Chainlink runs a fee model where revenue from enterprise usage, both on-chain and off-chain, gets converted into Link and stored in the Chainlink Reserve. So more usage from platforms like Robinhood Chain feeds directly into that mechanism. Every price update and cross-chain transfer translates to real economic activity flowing through the network. 2026 has been a year where adoption headlines and price have moved in opposite directions, but let's just be clear, Chainlink Labs does not have control over the market sentiment. If you look at the adoption or the wider adoption, DTCC, 50 banks joining Project Bankia, Fidelity International going live, and the chart barely reacts to any of it. You could say that the market is still treating those announcements as background noise. Now my view here is that this disconnect can't last forever. Personal opinion, but usage compounds, fee revenue compounds, and Robinhood brings something that the institutional deals don't, which is millions of retail users touching Chainlink secured products without even knowing it. When your mom can buy tokenized NVIDIA share on an app she already uses and Chainlink is quietly making that work, That's just adoption reaching a completely different audience. So that's it, that's the story. Robinhood went all in on blockchain infrastructure and they put Chainlink at the center of it from day one. And I'd love to hear what you think. Let me know in the comments, do you see tokenized stocks becoming a mainstream product, or is this still too early? And a like and subscribe would generally help the channel. Thank you so much for watching, and I'll see you in the next video. Cheers, bye bye.